Very, very good morning to everyone. We are here today for our 20 minutes coffee. Today, it's actually an important day because this is our inaugural webcast talking about tech, specifically about technology, about AI. I have the pleasure to share the panel with Jose Ivan Garcia, that is the chairman of Subgen AI, and our glad guest of specialist Christopher. Very good to see you, Christopher. Good morning to everyone. I'm here with my coffee. So we're gonna talk with both of you on what's happening in the market. As usual, our 20 minutes have been run by understanding on the macro side what's going on in the market, and of course with the Christopher, we're gonna definitely touch about it. Then we go talking about the sector, no? With Ivan, that is a specialist of the industry with his company. So my kickoff question, actually, it's let's talk about trends. What are the macro trends that today are shaping specifically the technology sector? And how you guys think that those trends are sustainable, no, in the long term? We have always thinking in a long-term period. When we talk about a long-term period, could be like 5 years, 7 years, and going forward, especially when we talk about the infrastructure, digital infrastructure. In some cases, it's even longer, no? Christopher, you would like to kick off, please?
Yes. I think one of the key trends nowadays, basically a challenge, is to have access to infrastructure, which means water, electricity. What's interesting in the United States, we are talking a lot about it, to have access to low-cost electricity, constant access to electricity, or also access to water, because we need it for data centers. In Europe, we are not talking so much about it, basically only because we don't have so much investment in AI, but it will happen in the coming years. So we need to be prepared for that. I think I just have one figure that is interesting. In Virginia, the US states, we have 25% of the total energy consumption goes to data center, 25%. So this is huge, and it will increase much more in the coming years. And keep in mind that Virginia is not one of the most the states in the US that is investing so much in AI. So imagine in Texas, where we invest a lot, or in California, it is already much more. The problem with that is that most of our electricity infrastructures, especially in the US, but we see are not able to cope with such a high demand. We have seen recently what has happened in Spain. We don't know exactly what caused exactly the blackout, but as a matter of fact, it shows also that we are very vulnerable on that. So governments, but also companies, when they come do, they need to invest, of course, in data centers, but also they need to keep in mind that they need to have access to ideally low cost, but also constant electricity sources. So it can be everything. It can be nuclear energy, it can be renewable, whatever you want, but the cost of energy is going down. But we need to keep that in mind if we want to invest a lot in AI. I think it's one of the key trends, but it's mostly a challenge that we will deal with in the next 5 years.
Pretty enlightening. I was pretty scared actually on what happened in the last week. It was last week or 10 days ago, the blackout that you just mentioned, especially in Spain and Portugal. No, even you are based in Spain. So what's your view? What was your also not only your view, your experience, and what are the worries actually from what happened? What are the learnings, let's say?
Well, I think it's an important topic to raise, because what happened here, as Christopher said, I mean, no one knows exactly what has happened, and regarding that particular, the source, the way, the smart access to computing, that's going to change a lot, because if we still, I mean, they wanted to jump in with both feet, and this creating this, you know, enormous data centers and stuff. I think that's, of course, now in this situation, in this moment, that is a very early stage. A lot of companies and governments were betting on that, but my guess is that decentralized grid architecture will help to dissipate part of those risks, and also having computing power close to demand centers. So that may help a little, and that's part of our strategy in Subgen. But yeah, regarding these trends and ideas, we believe that AI automation is going to be key. Vertical SaaS and platformization is going to be key. ESH aligned innovation is going to be key as well. I mean, there's an important investigation that has to be done regarding how to be more sustainable for this demand, and cloud native architectures, and also might be a trend to identify.
Yes, indeed. You mentioned there are a lot of concerns actually from the market side on data center, when we talk about, let's say, data center digital infrastructure and sustainable energy, right? This is on the concerning side also, because as we know, the AI, to run an AI business, strict sense, you're gonna need a lot of electricity usage. So I think on the other side, one pretty interesting would be the usage of data centers, new technology in terms of power generation, clean power generation, renewable use. I know that you guys also are using a specific you're going to use a specific technology. Am I correct that is going to be like clean, carbon zero, and so on? So I think this is going to be very, very, very important.
Yeah, you are right. I think in this case is very important, because I mean there are like few factors in what we call the AI factories that we are building. Okay, so one of them is decentralized grid architecture, as I mentioned before, in order to scale. I mean, scalable computer power with proximity to demand centers. This is key. Then net carbon negative design. That's important. We are using a new technology with a partner of NVIDIA. And that for us is key, because it's not just a matter of be neutral, but even be carbon negative. And that's key for the next years. Also, this AI focused infrastructure. So data centers are for many things, but when it's AI focused, built for GPU workloads, measured in GPU hours, that allows the clients to shift from CapEx to OpEx models. And that's important as well, because now they don't feel that idea of investing, as I said, jumping in with both feet, because it's not that clear what's going to happen over the next just 1 year, maybe, or 2 years. I mean, everything's changing so quickly. So OpEx models are going to allow the clients to invest in a way that is not that critical for them, and start exploring, because eventually this is AI is gonna change, it's gonna be embedded in everything. So that stage is important for them. And also what we call the full stack solution, that is combining infrastructure plus AI agent deployment, enabling clients to run production AI systems with the minimal friction possible. That's key for us as well. So you have computation and you have agency, both, I mean, AI agents deployment, both in the same full stack solution. That's the way we are approaching this new era, let's say.
Let's talk now a little bit about other risks. Let's take it much more on the macro side. Christopher, I would like you to jump in this. We are experiencing with you in our 20 minutes coffee we spoke a lot about macro risk and how this affects the market. I would like much more focus on the macro risks that we are experiencing so far. And one of them, I would say, is the major that everyone is talking today, tariffs, no? From United States to the world. We are seeing how those things are evolving on daily basis, right? And the impact actually on the raw materials that are the one related to the sector, no? The digital infrastructure sector, AI, industry. I would like to have your view, Christopher, concretely, how all this can effectively or is already effectively affecting the asset.
Well, we are facing a lot of uncertainty, that's obvious, but I think there will be mostly 2 points I would like to discuss. First, I think we need to consider that companies are very creative. At the end of the day, we see that they manage to mitigate the negative effect of tariff. I will give you just one example. Let's look at Apple. Apple is building currently in India, in a factory in India, the iPhone 17. In January, Apple needed to purchase a machine to build the iPhone, but the machine was in China. The Chinese government refused to validate the purchase. So what Apple did, they created a shell company in Vietnam. The shell company purchased the machine. Then it was sent to the factory in India, and at the end of the day, the consumers will be able to have the iPhone 17. So this is only one example. Of course, Apple has a lot of cash, so they can also set up very quickly in any country a shell company. But at the end of the day, what we see is that for the technological sector, I see that a lot of companies are able to mitigate the impact of tariff. All governments, China especially, US, they don't want to end up all the trade relations, especially regarding all the materials that are needed for the tech sector. And on top of that, all those companies, all the tech companies, at the end of the day, they have, most of them, a lot of cash. They are able to implement some strategies to avoid tariff. So I'm very confident that it's not one of the sectors that will be the most affected. But you mentioned something that was interesting. It was access to raw material. And I think what the Trump administration is currently doing is they understood quite well that it's very good to have extremely performing AI chip, for instance. But at the end of the day, you also need to get all the raw material to build them. And the Trump administration understood quite well, you know, when they want to purchase Greenland, it's not, of course, it's for trade, but it's mostly because in Greenland, you have a lot of rare earth, you have also a lot of industrial metals, you have a lot of uranium that you need for the energy as well. So they have this strategy. Of course, it's the way they implement it is quite violent in one way, even verbally. Mm-hmm. At the end of the day, they have this strategy that clearly makes sense. And I think a lot of tech companies understand that in this new geopolitical situation that is evolving very fast, you obviously need to get access to investment, you need to get access to energy, but you need to get access to the first step, which is raw material, and which is also some industrial metals that you will need at the end of the day. And this is something, so I think one of the factors tariff as itself, but much more all the strategy that the US, but also other countries are currently implementing to get access to raw materials. So tech companies need to try to navigate, to plug to this kind of strategy to get access also to raw material. I would say, obviously, at the moment, the US is in a better position because they have a domestic strategy that they will implement. China have a lot of raw material already. Europe is talking about it, but they haven't. Sooner or later, they will have to do it.
Ivan, now you from the industry side, can you give your view on this and how you guys are tackling those kind of possible threats?
Yeah, we have been analyzing a lot the macro view of the situation. But from a helicopter view, let's say, we clearly, we believe that we are entering an era of regional blocks and economic fragmentation again, a little bit. It's like the beginning of this new potential new era. And that also might bring a little bit more of protectionism dynamics. And in this sense, we believe we need to focus on EU in this case, as from the industry. The EU wants to invest a lot on AI precisely because of that, because they wanted to be a little bit more sovereign about the AI that is built in here and what happens in here and the data that happens in here. So, and that is produced in here, sorry. So precisely because of that, we believe we need to focus on the EU and work on this idea, because the macroeconomics, as Christopher, that is an expert on that, of course, are pointing towards that idea. And as from the company perspective, we need to align also to those possibilities. So that's what we are doing, yeah.
Indeed, I just read. Sorry to say, Christopher, it was the competition, because I just read the latest research of the infrastructure team at Goldman, and there was a specific, very important, very relevant numbers on the data center growth till 2030. It's something of crazy of investments potentially, right? I don't know where we're going to find the electricity to tackle. It's going to be like a huge investments on the grid also that must be done. But it was very curious. I'm pretty sure that also the Pictet researchers can show the same. But now another important question that I would like, all the time when we talk about technology, in this specific case, we are very much in the middle between AI technology, that is specifically the sector, but also on the data center side. The data centers are also with you, Christopher. We've been always talking about it's a real estate, it's infrastructure. So it's let's say it's a real assets in the real asset world. So everybody, I guess, is in the same page. But the most important thing is how we find value behind technology investments, because it's innovation. Okay, it's something that at the end of the day, it's not that much tangible. You can't really touch it somehow. Instead, you have the infrastructure, the real estate that you can touch it, you can see it. My question is very much to both of you, the concrete value behind technology and how actually the investor can catch it.
I will be very quick to give just the broad overview. Nowadays, it will change, of course, in the coming years, but nowadays, most investors, and especially our clients, when I talk with them, they find value when it's related to AI with platform. So like a company like Meta is able nowadays to be very profitable. They had a very strong earnings recently because they have access to a lot of data. They know how to deal with them, and they can implement AI on their platform. So platformization is basically where we see a lot of values for investors at the moment. We know it will evolve. It will go to robotics. We start to see it also in the car industry, but the largest listed AI stocks nowadays are mostly related to platformization.
Ivan, bring us the light from the industry now.
Okay, I think the key aspect is scalability, but without scaling costs linearly. This is a very important thing for investors. Also, investors should look for tech ecosystem, not just products. This is very important because otherwise they are like rumbling between many different products, and they don't know how to have a homogeneous strategy for AI deployment in their company. So tech ecosystems are way important, and the more data you have, the smarter your platform becomes. That's your moat. I think these are the three most, the three important aspects that for an investor should take into account. Yeah.
Interesting. When you used to talk about data, we always talk and think about the new gold because it's so relevant, it's so important, and this is so interlinked to other kind of investment. That is why also the battery storage boom and all the investment linked to that. Now, my last question in the last minutes that we have left, unfortunately, I have to tell you that we are already out of our time, but this is always happening, right, Christopher, when we have a lot of very good juries. Yeah, this is the time. I'm going. We're going to take another couple of minutes, so don't worry. I would like to end it up this very, very, very lovely, and thank you for that, first inaugural web panel of our series. I would like to hear, Ivan, what actually will be, in your opinion, the market of AI in the next 5 years? And then the same shortly on the macro side to Christopher.
Okay, let's crystal ball it. So AI will be the new infrastructure. This is for me key, like electricity or cloud today. It won't be a pilot program. It'll be embedded in every operational layer. This is what we believe, actually. Agentic AI will change how we work, decide, and scale services. That's going to be huge for the next 5 to 10 years, for sure. Compute is the new oil. So, and also the way to access compute is going to be key, okay? And that's why we are like building what we call AI factories. So we offer GPU capacity plus real world AI agents. That's our edge, and we're doing it because we believe that this is what is going to happen.
My turn? Okay, very fast. I think the key focus more broad macro side will be the link between robotics and AI. We know a lot of AI companies are starting to work on it, but the results are clearly not good enough. It will take a lot of years before we see something that we can sell, basically, because that's at the end of the day the idea. But I think it will be one of the key steps in AI, probably in 4 or 5 years, perhaps a little bit beyond.
Lovely. A lot of Jewish, like we like it. I very much enjoyed. I hope that you guys enjoyed the same like I did. I'm pretty sure that we're going to receive a lot of very relevant feedback from it because we focus on educational. This first tech talking had been proving it. I once again, Ivan, Christopher, thank you very much.
Thank you a lot.